Hey, welcome back to another episode of Asset Coach and Tax Strategist. So today's topic is passive income. Passive income is, I think, a little bit misunderstood. And so let me explain what I mean by that is that, a lot of the TikTokers, Instagrammers, YouTubers are always talking about passive income. We talk to our clients, our members about passive income and the importance of passive income. But one of the things to keep in mind, Robert Kiyosaki talks about this and does a really good job of communicating about passive income. One of the things he likes to say, the word passive is very misleading. What I mean by that is that passive income in the beginning is not passive. You need to be active. You need to be involved. You need to be performing and looking at capital, education, and where your dollars are going. You got to have a plan. You got to understand that how to structure this passive income and where it comes from. The key is that you don't necessarily want passive income because income is taxable. You want passive cash flow because what does a business generate? Revenue. It has a cost of doing business, which is expenses. You subtract expenses from revenue, you get cash flow. You want cash flow because from there you can direct the cash flow into other areas of your plan. Then at December 31st, the end of the year, you want to close your books and determine, do you have profit or loss? That passes to your 1040. Now, passive income really basically means I don't do anything for it. Well, to Robert Kiyosaki's point is that in the beginning, you're doing a lot for it. Is your plan, is your structure designed to where that passive income, passive cash flow, is actually grading your activity in the beginning? You're participating actively in the beginning. So, therefore, is it really passive income? Or if it's structured correctly and you're actively trying to create passive cash flow, then can that passive cash flow be turned into active cash flow, which passes to active income? And the answer is yes, because it's based on the activity and the participation. The IRS calls it material participation. And you have to prove to the IRS how you're materially participating. So as you're going through this and you're trying to build this quote unquote passive income, what's happening is people are not documenting that. The key is when members come to us, they come to us because they have a tax problem. They want us to resolve and fix their tax problem because everybody they've talked to is not able to do it. Now, that's not true, of course. There's people who can do this. But the key is the structure needs to look at how the IRS communicates about this. What are they telling us to do? They're not telling you to do passive. They're telling you to do active. They're telling you to materially participate. And as a business owner, when you're materially participating, then you're actively participating in the legal system of the tax system. You're documenting, you're structuring, you're trying to make money. You're not a hobby, okay? You're a true business. In order to want to and structure tax savings, you need to have a business owner mentality and a business owner structure. So when you're creating passivity, nope, it's activity. And that activity is a business decision. Passivity is an employee decision. I want to do something, but I don't want to work hard for it. I want mailbox money. Well, you can't just snap your finger and get mailbox money. You got to go do something. The problem with this whole passivity and this passive conversation is that the IRS, the system is telling you to go do it individually and create income. And when you have income, what do you have to pay? Taxes, right? Versus in a business, you have more availability and more purpose of trying to make money and participating to create not passivity, but activity. Then we document the activity, and therefore you have cash flow. And in that activity, that active allows you to utilize the tax code to reduce your tax liability, which everything we're talking about is building wealth first. People are looking for passive income, active income. They're looking for investment. They're trying to build their wealth. You build it, you structure it the right way, then you can actually receive tax benefits in that order. So the IRS is your business partner. They're giving you guidelines, directions on how to do this. It's just you don't understand the dialect of the IRS and what they're talking about. But when you do understand that, then you look at this and say, okay, so the IRS, it's a win-win. You overpay taxes, they win. You don't overpay taxes. You save taxes, but that extra cash flow, you're doing what? You're putting it into your business or other assets. Who's usually linked to your business or other assets? Taxpayers. So the IRS wins. You want your business partner to win. You just want to win as well. And the way you win as well is build your wealth, lower your tax liability. That lower tax liability, you win as a business partner with the IRS. They want that because when you win, they have more of your cash flow to put into the system and creates more tax revenue for them. Sounds really complicated? Really is not. Very, very simple. The problem with wealth building, the problem with tax savings is we're always being selfish. I want to save money on taxes. I want to do this. I'm frustrated. Great. But we need to redirect that and say, if I can take care of my business partner, the IRS, they too will take care of me. That's not passive. That is 100% active. And your business partner, the IRS, gives you benefits, rewards for that activity, not the passivity. So don't be lazy. Don't sit back and not do anything. Put on your bootstraps, put on your tool belt, put on your work clothes, roll up your sleeve, however you want the analogy to be put, and get to work. Go get it. Earn it. Then you'll receive it. Stop focusing on receiving before earning. It's not how the formula works. If you enjoy our content, please give us a thumbs up. Feel free to subscribe, share this video with all your friends, family, and colleagues. Thank you so much. Make it a great day.